Kia ora, and welcome to Friday's Economy Watch, where we follow the economic events and trends that affect New Zealand. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with the news that we are ending the week with Wall Street not finding much to like about future trade prospects, especially as policy shifts seem to be highly chaotic and involve personal retribution. US initial jobless claims rose last week to 195,000 when seasonal factors indicated it will fall. There are now just over 2 million people claiming these benefits. This time last year, there was just over 1.9 million, a rise of 99,000. American consumer inflation expectations for the year ahead rose to 3.1% in July from 3% in June. This was held back only because of widespread perceptions that petrol prices would fall. Medium year ahead expected change to food prices remained unchanged at 5.5%. Looking further ahead, inflation expectations in 5 years rose to 2.9% from 2.6%. Meanwhile, second quarter American labour market productivity improved in data released today. It rose by 2.4% in the quarter, following a revised 1.8% drop in the prior period. Analysts expected a 2% increase. Output increased by 3.7% and hours worked increased by 1.3%. The US agricultural sector used to be a powerhouse export driver, but no more. Data released yesterday shows it's turned into a net importer, a trend that started in 2018 in the first Trump presidency. The first half of 2025 has now recorded its largest deficit on record, mainly on stuttering exports. Meanwhile, American consumer credit rose in June, but only modestly. Total consumer credit rose by just $7.4 billion in the month, up from $5.1 billion in May. These are minor changes and don't indicate any impending credit stress. Across the Atlantic, in a tighter-than-expected vote, the Bank of England cut its policy rate by 25 basis points to 4%. They have inflation running at 3.6%, with a target of 2%. 5 of the 9 voting members voted for a cut, but 4 wanted no change. That was much closer than the 7-2 vote expected. In China, they're not only subsidising trade-in programs to help juice their domestic economy, they're now subsidising interest rates on personal loans. Consumer credit has not been traditionally popular in China, but young people are signing up much more freely. It is a sector that may grow to hold financial stability risks. And Standard & Poor's has affirmed China's sovereign credit rating at A+ and stable. China's government gets a AAA rating from its own domestic ratings agencies, but Beijing was pleased anyway with the S&P result. Container freight rates fell 3% last week from the week before to be 58% lower than year-ago levels, although to be fair, those were unusually high. Outbound from China was again the main weakness, although outbound from the US is now showing up as a weakening trade too, and that starts with very low rates anyway. Bulk cargo rates were essentially unchanged over the past week and are now 18% higher than a year ago. The US Treasury 10-year yield is now at 4.25%, up 3 basis points from yesterday. The price of gold will start today at $3,391 an ounce, up $17. American oil prices, though, have slipped back again, down another dollar to just on $64 a barrel, while the international Brent price is now just on $66.50 a barrel. And the Kiwi dollar is now at 59.5 US cents, up 10 basis points from yesterday. Against the Aussie, we're up 20 basis points at 91.5 Australian cents. Against the euro, we're up 10 basis points at 51.1 euro cents. That all means our trade weighted index starts today at just on 67.3 and up 20 basis points. And the Bitcoin price starts today at $116,442 and up 0.8% from yesterday. Volatility over the past 24 hours has been modest, though, just on plus or minus 1.1%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again on Monday.